Hello and welcome to another update video about AGIX, one of the AI coins. These are pumping at the moment. Made a video yesterday about it and it has broken through resistance. And I have to go to the slightly more bullish chart due to that, because it appeared to be, we had two counts anyway, but it was looking yesterday as if we would get here a bit of an ending diagonal pattern. I mentioned to you, if we break out above this sort of wedge pattern to the upside, we are heading into the more bullish count, which we are going to do now. Last entry point was here, and then we talked about it here on the 15th of January, and then we made a member live stream about AI coins at that range breakout. I think it was at 7 to 9 cents or something. So I think it has moved nicely since all of these points and levels started to take some profits yesterday, but I will leave my 75% in for more upside. But you know, the problem is now, let me take those subwaves out and we can discuss further. The problem is now that it is moving in a way which makes it a bit nebulous. The problem is, if we zoom out, the chart is basically, it has always only acted really like in a downward fashion, okay? Which means without a problem, this could still be a bearish count. So I'm not suggesting yet that we have to be in a bull market or anything, because we don't have enough waves for it to suggest a trend change as per Elliott wave, which doesn't mean we couldn't trade it. I already, I bought in, mentioned that to you a few weeks ago when we did the made the AI member live stream. Just as you know, AI is the obvious topic for 2023. It's everywhere in the news, everywhere in the media. However, there is still a risk that, this can be counted as a 5-wave move down. So just to give you a bit of context, this could be a wave 1 to the downside. This here could without a problem be an A, B, C in a wave 2. 1, 2. And we could just over time sort of die. That's not necessarily what I go with. That's also why I bought, but I just want to let you know, as always, the risk. Yeah, of course it wouldn't go into the negative, but this could easily be a wave 2. That's why I'm telling you it's a bit nebulous now, that we moved a bit too strongly. Yeah. For the ideal 5-wave move to the upside, it would have been nice to finish the 5 waves, come down, make a clean wave 2, and then go up further. Now we've pumped again. It's not ideal from an Elliott wave point of view because it makes it a bit nebulous. But we can now use the fib retracements just to see where, let's say if it is a wave 2, where would it find resistance? You can see we've now found resistance at the 61.8 fib. Now we are just below resistance. I'm going to add those resistance levels onto the chart now. We've got here 42.4. That's an important one. And then we've got the 78.6 fib at 53 cents. The way it's going now, I wouldn't be surprised. If we break above the 42.4 cent level, it could even reach the 53. If it breaks above that, we are certainly in a territory where it could pump in a, let's say, irrational fashion to an all-time high. So that's certainly the possibility. And but still, there will always be a pullback, and I would like to see that clear 5-wave structure. If things are getting hyped like it can often happen, the same way as it happened before, and it may come down again. But still, we are watching it. At the moment, there is no sign it's stopping yet. Even yesterday, we didn't have any sign of the trend breaking. It was slowing down, but there was no sign of the trend breaking yet. We're above all these 3 moving averages we've got down here, but also here, I just need to remind you, a moving average is an average of the price, and eventually the price will pull back to the moving averages. We've got on the chart here the 20-day, 50-day, 200-day, and we had a golden cross down here, and they are now acting as support of the price. So, everything is short-term bullish. Just letting you know that on the long term here, we don't have any confirmation that the bear market is already over here, and this could just be a fake out pump, as we had it many times in the bear market. Okay, so hopefully that is clear. But this gives us an idea of resistance levels here. So 42.4, that's exactly where we found resistance. If we break above that, you've got 53, 59.4, 66.5. So these are the clear thresholds. 66.5 is obviously the all-time high, let's call it threshold. And with the latest, let's call it pump, I don't really have clear 5 waves because I have to count it as a 1, 2, and then here that we are in the wave 3, it could easily just be an ABC. By the way, I have to move the wave 1 here. So it's either an ABC in blue, which would be that wave 2 that I mentioned to you, and or it's a 1, 2, 3, but then it's pumping so much, it would be healthier to finally get that 4th wave and then move up in another 5th. And then this would form a wave 1, and then we could wait for a wave 2 pullback to scale in and to trade the 3rd wave. That's sort of where we are, right? And, I always get the question, what should I do? Is it too late to buy? I mean, I'm not buying anymore now. I'm waiting. I took some profits, as I said yesterday. Was quite happy with the performance since the buy price, but I leave my remaining position, which is still the majority now, in just to see how this is carrying on. I wanted to buy them for the long term anyway, and then I would decide as it goes along. What should you do? I know this is also always so difficult. I explained that yesterday in the Bitcoin video. Did explain, for some people, it is worth sometimes buying when others are selling. It just is, you can only base your trading decisions on what you have done in the past. So I can't tell someone, you should buy now or not. Because I bought it, what was it, 10 cents or 12, I can't remember, or 9. So of course, I want to take some profits along the way. And it's in my opinion wrong to always try to absolutely max out every little bit of profit of every move, and then in the end you take it too late and then it all dumps down again. But if someone has no AI coin exposure at all, I mean, you might decide to put some pocket money in. But now obviously we're just pumping and pumping. Personally, I wouldn't do it now, but of course it can still rally high. There's no sign of stopping. It's just getting nebulous. And if you want to trade something professionally, you normally don't want to trade nebulous structures. So, but we can follow it, and we can use here the Elliott waves for targets. Obviously, for typical extension targets, this is now moved way too high, and therefore we're using the retracements. And I gave you the key targets and the thresholds. Let's see, when we have a clear top in place, then we'll watch out for possible wave 4 retracement. I will give you a support area for that. That could be used to scale in, but before that happens, this might still push much higher. And then we are looking for another wave 5. Or we only have an ABC and it will break down completely. And for exactly that purpose, I took some profits already. So we're going to see. The way this is going, though, is really looking like a 3rd wave. In white, 1, 2, 3. And in the wave 3, we might have the situation that this is just an extended 5th wave. What you often get in a 5th wave of a 3rd. So the 3rd wave is normally the highest reading, especially the 3rd wave of the 3rd. Now we did have that here, and it was a very high reading on the RSI. Now we're pushing higher, and it will need to be seen, can we push above the previous high on the relative strength index? If we can't, then it is an indication that this is really a 5th of the 3rd wave, because you normally see the highest reading in a wave 3, especially in a 3rd of the 3rd. In the 5th of the 3rd, you start to see a bearish divergence appearing. So it will be interesting to see over the next few hours and days, can the price push up so much to actually take out this divergence? And then I might have to look at it as some kind of a 1-2-1-2 structure, and this is actually a 3rd of the 3rd. We'll see, but certainly doesn't look yet as if the trend is over. Also, momentum here is pushing higher on the MACD. And here we don't have a bearish divergence, at least not on the daily. But yeah, it's getting interesting here for these coins. Unfortunately, low, short price history. So we have limited data really to work with. But certainly in an uptrend on the 4-day as well, we're here as well now overbought, which just means we're in an uptrend, strong uptrend. On the weekly, we have the highest reading that we've ever had really, which again might give us a clue that this is a 3rd wave of some sort. But then again, I have to say that we don't really have any historical data on the weekly. So it's a bit speculative, isn't it? But yeah, it's certainly interesting here. And I'm glad that we discussed the AI coins a few weeks ago. It was and is the obvious topic for 2023. And as you know, these rallies can carry on quite a bit. And also, again, it's nebulous. As long as this uptrend is in play and as long as we're holding critical support levels, this can still push higher, and this can still easily get to all-time highs from here, but nobody knows, right? And therefore it's so important to be strategic about it, have your risk management in place. Danger is that a lot of people go in highly leveraged, and if that happens and if something gets hyped too much, it can in the end break down, unfortunately. Now, let's take another peek here at the lower time frame. I thought about, is this some kind of a 1-2 setup? But it can't be, because this was a corrective move up. So I'm counting this as the end of the wave 4, and this would have to be a 1-2. And now we are in a third, possibly in a third of the fifth of the third, if that makes sense. So in some kind of an extension here to the upside. And what might have happened is, if you want to know the subwave count, but that's normally not so relevant, but we could say this was a 1-2 setup. And then here, possibly a third and a fourth, might have been a triangle, and then here another 1, 2, 3, 4, 5. So we might be pushing a bit higher. This might just be a fifth wave now, off the fifth wave, off the third wave, if anybody wants to see the micro count, but they are not so important normally. Important is to understand what are the key thresholds against which work on getting higher. This is now so extended that obviously key support levels have been are very far away, which is also why it's always so dangerous to jump onto a running train. Because you don't really have the clearly defined support areas anymore. Now, here the obvious one would be the last low here, which is at 32.1. Now that is quite far away already, but we won't really know before. So as long as we're holding that level, you could say you focus on higher, but the point is, if it breaks, then this might have been the end of it. I'm just thinking, that's what I would go with. But it's not. I'm not very convinced of this micro count, which is why it's so important just to look at fib levels as well, okay, which you should all be aware of now. So in the short term, it goes higher as long as the 32.5 cent is holding. Gave you the next targets. We're still hovering below resistance. That obviously needs to be taken out to get to the next level on the fib ladder, and I will keep you updated. Okay, that's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.